This week, Ben and I are going to talk about some macroeconomic factors, inflationary pressure, along with an updated USDA supply and demand report and the National Oilseed Processors Association look at soybean oil, soybean crush. Welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Oh, I'm good. How are you this morning, Will?
Doing all right. Got up early this morning. Been watching opening day of baseball. It kicked off in Japan. I think first pitch was sometime around 5 a.m. Central Time. So just excited to have baseball
Spring,
back.
spring is here.
Spring
Not
has
quite, but
not
almost.
quite. Spring has just about sprung. It's
I also have my measure of like when does spring arrive. When I'm driving around for county meetings, I can tell we're getting close to spring because my attendance at meetings like quickly deteriorates, right? No one wants to come to a meeting. They all want to be out in the field. So attendance quickly deteriorates. Then the second thing is the amount of people out spraying winter wheat or putting fertilizer on winter wheat. That always tells me that spring is basically here. So between that and baseball, we're there.
we're there. Well, but see, back in the day, I'm gonna just make myself sound old, but like opening day used to be around April 1st, and now it keeps creeping earlier
Well,
and
for
earlier.
everybody not named the Dodgers, it is still April
Well,
2nd or
yeah. Well, yeah,
It's
and the
just
Cubs.
you're talking about that one team that's having a strange game this year.
Well, two teams. It takes two to
Two
tango.
teams, correct? Yeah.
All right. Well, I'm going to give a quick rundown on prices before we jump into our topics for today. Really, when you look at the week over week action, not too much movement. Looking at that corn contract for May, down 11 cents on the week at 458. December corn down 3 cents at 451. May soybeans down 9 cents at 1016. Soybeans for November down 7 cents at 1018. Soybean oil for May on a cents per pound basis down 1.83 cents a pound at 41.59. Soybean meal by the short ton for May up $9.40 at 305.90. May wheat was up 6 cents at 557. May cotton up 1.3 cents a pound at 67.37. And then that West Texas Intermediate crude oil contract up 18 cents a barrel at 66.96. But Ben, I actually want to start on that West Texas Intermediate contract. Even with that slight increase, it still, seems relatively low at the below that $67 mark.
Yeah, absolutely. Relatively low is I guess depending on when you're talking, that's the economic answer for everything. Depends on a number of things, but 67 dollars per barrel, that's well below the $120, $110 that we saw, a couple of years ago. That's below kind of that $70 to $80 threshold that we'd kind of found a home in. Certainly, crude oil markets and prices have been falling. They've kind of been trending lower for a little bit. It'll be interesting to see where they go this week. So I pulled those prices yesterday. I guess Friday. So not at the end of the day, close on Friday, but certainly over the weekend and Monday, got some news kind of out of the Middle East. I wouldn't be surprised if we don't see a bigger week over week increase if that continues this week. So. Maybe a little bit of concern around the oil, more short-term concern around oil prices going higher. But I think this is kind of pretty close. I think $70 is pretty close to our equilibrium on oil prices. So
Yeah, well, and just looking at where we sit kind of as we head into that spring planting timeline, you'd expect that to creep up maybe as temps continue to warm up and maybe operators are a little bit more aggressively out and about and moving around. But Ben, starting this week's topics, looking at some Fed policy decisions in relation to inflation, the inflationary measures slightly up, but not up as much as maybe expectations. So a little good, little bad. Where does this really kind of, make you think that the market is going as we look at what we saw from the consumer price index and the producer price index?
yeah, so it is Fed week for those of us that follow and celebrate, I guess, or whatever. I don't celebrate it.
Celebrate or commiserate, whatever you want to call
Yeah,
it.
yeah,
Yeah.
whatever you want to call it, whatever you want to call it. The Federal Reserve will update their policy this week. They'll have the official release and then a press release following. Now, just reminder to our viewers, it's been the press conference after the fact that has been the most, I guess, substantive the last few months. Just kind of getting an idea, because this Federal Reserve and Chairman Powell seems to like to use words and language to kind of set the tone for the market rather than the blunt tool of changing interest rate policy. So both are important, but just to keep that in mind. I'll summarize my thoughts up here very, very quickly. So leading up to this particular Fed report, we had 5 economy-based reports that all were of interest. All 5 of them basically trended in the direction of weaker economic activity, slowing consumer demand, maybe a little bit of softening in the job market. And the end result is that, I don't think the Fed's going to change policy. That's my expectation, is that they hold those interest rates constant. However, it is probably setting us up to see more concern about the expectations of future economic activity. Confidence in the broader consumer economy is very weak. It fell very hard this month, and certainly when you read into the data, consumers have concerns about economic health, high levels of future inflation, job security. Those are all things that you don't necessarily want to see, because that creates challenges down the road. However, in the short term, this probably does mean that we're probably taking some interest rate hike possibility off the table, and maybe restarting to think about cutting interest rates again later this year. So again, I don't think they're going to change policy here in March, but certainly all the macroeconomic data that came out last week was a little bit softer and frankly, just more worrisome, I think, than what we'd been seeing.
Yeah, well, in talking about maybe the potential for there to be cuts later on this year, and your comment talking about Powell maybe wanting to use language as a tool more so than the actual interest rates themselves. That seems to be in line with maybe what this administration wants to see, with definitely cuts, but definitely staying away from any interest rate increases. But Ben, moving over to USDA report, we got the March update for their supply and demand estimate, and really the balance sheet was largely unchanged, even though there was an expectation, at least on the corn side, to increase the demand estimate. That really didn't come to be, into existence here from USDA. So what's your takeaway when you look at what this means? I think that, the March balance sheets or updates are only so impactful, especially as we move into the planting season, when that probably has quite a bit more sway on the markets, but still something of note to watch from USDA.
Sure. So yeah, USDA made very, very few changes, I guess, to domestic balance sheets for really corn and soybeans. We saw a small reduction in exports, and certainly I think that is warranted, although we did see a really good week of exports this week for wheat. And then probably the thing that was the most substantive in the report, at least from the domestic side, was the changes that they made to grain sorghum. So USDA acknowledged that grain sorghum exports are pretty weak, and that feed demand has been strong. And so they did lower exports of grain sorghum 70 million bushels and increase domestic feed use 50 million bushels. Now, on its surface, those are sizable changes, but then you add in what they did the previous month, which was also lower exports and increased feed use, and you add those two together. Feed use is up 75 million bushels over the last 2 months, and exports are down 120 million bushels. So the reason I say that's substantive is because a lot of that grain sorghum is competing with corn in the feed bunk. And so, I think that sets up the corn market for the end of the month when we get the March 1 stocks report, trying to figure out, okay, how much corn actually was displaced by sorghum and other feed grain products. So that was probably the most substantive from the domestic standpoint. On the international standpoint, some of the global numbers were surprising. Global soybean carryout came in below all expectations, down to almost 3 million metric tons month over month. That came despite no changes to both Argentina and Brazilian soybean crops. So all that change came in other parts of the world, and that was kind of a surprise. I wouldn't have pegged that that global stocks would be down that much without big changes elsewhere. But what we saw is we saw added use in the world. Argentina feed use was up 1 million metric ton. China feed use for soybeans was up 2 million metric tons. That helped draw down those global stocks. So, kind of that is a bullish change if you think about it, right? Because it's not coming on a reduction in supply; it's coming with increased demand in the world. So that was kind of notable as well. All this is setting up to the end of the month, though, for the acreage prospective plantings and grain stocks report. That'll be a big day.
Yeah, maybe a little bit more of a market mover than the recent USDA report here. But another report looking at that National Oilseed Processors Association, they reported their crush at 177.9 million bushels for February, which was below expectations. And Ben, looking at the crush number, it kind of tells two different stories depending on the angle you want to look at it. You see, a high crush number or, above expectations, and that might say, well, there's more domestic demand than international. Or if that number drops, you're like, well, yeah, we're might be gaining more of a tailwind into the international market. So Ben, as you look at the NOPA report number, what does it really signal to you whenever you see it maybe below the expectation?
Well, the report was disappointing. I don't know how you look at it and not
I'm
say
trying to put a
disappointing.
positive spin on it, Ben.
Yeah, it was disappointing. As we see facilities slow crush, of course, that's going to tighten our soybean meal production. That's a market that has kind of been moving, a little higher over time, and so that's going to tighten up those product categories. Soybean oil stocks continued to move higher. We saw soybean oil stocks up month over month, and even though they were slightly down from the same period a year ago, they were still moving higher. That talks about the decreasing demand for soybean oil, and I shouldn't say that's not the way I want to say that. It's the lowering of demand for soybean oil because of lack of biofuel policy, right? It's not like demand is falling out of bed and demand is declining and the end is near. It's that the policy that has guided these markets is unclear, and there's a lack of true guidance for this. And so the use of domestic soybean oil for biofuels is struggling. It's trying to find footing, but it's struggling in that. And as a result, now we're starting to see this very disappointing soybean crush report month over month. So the market took it better than I anticipated, given where expectations were ahead of the report. But still, I think it's hard to see a mass correction in this market, at least in the short run, when unless we get the policy cleared up. That's the story. Is getting the policy cleared up would be hugely beneficial to this market.
Well, Ben, I think I'm going to clip off what you just said there and just cut it to where it sounds like you said demand's falling out of bed and the end is near.
Yeah, and the end is near. There you go. Yeah, I guess I got to work on that phrasing. It's not like it's totally. It is just sad that like the industry built the infrastructure, and now we're sitting here trying to figure out, okay,
what to do with it.
Where do we go from here? And for soybean oil and soybean crushers for that matter, we've increased soybean oil exports tremendously.
Mm-hmm.
Soybean oil exports currently are running 31% above the seasonal pace needed to hit the lofty expectation or export target that we're already there. And that comes after USDA increased soybean oil exports, I think 200 million pounds this month. So, the export number is trying to absorb some of that added soybean oil, but unless we can figure out how to get the domestic production of it figured out, I think we're going to see
it's going to drag behind and lag the market. Yeah. Well, Ben, looking forward into the rest of this week, what should farmers and ranchers be paying attention to that could move the market?
Well, it's not as busy of a week as it was last week. I feel like last week was just kind of a really, really busy week, but we've previewed the Fed decision coming up on Wednesday. That'll be an interesting report just in terms of future direction of interest rates. Primarily the press release is what I'm interested there. We get a cattle on feed report on Friday, and then consumer confidence next Tuesday. Those are kind of the headline reports for the week. But this is all setting up to the end of the month for prospective plantings and stocks reports. So that's where we're heading.
All right, Ben, it's always a pleasure to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.